Good morning, everyone, and welcome to the European crossover webinar. We've seen the euro move up a little bit, got above 113, and has gently pulled back, but everything's going to stay relatively quiet until we get into the morning, where Yellen goes and gives her remarks. I was reading some information. She's not expected to go in and take any questions and answers. Most of the other people out there expect her to be, maintain the dovish stance overall. So we'll have to see how that plays out. My thoughts would be a little bit different, but you never know. You really never know. I think it's going to be one of those days where you just have to go with the flow of whatever is being, said. I believe so. I don't. Obviously, if she gives a more upbeat review, and I think that that's warranted, then I would suggest that they may be ready to go in September. She may not want to allude to that, which is probably going to be, bearish for the dollar. So, like I said, we're just going to have to see how those statements go. Essentially, that's it. I don't think there's anything else to see on that. So we'll have to see what she says in that vein, if she goes that route or not. We do have gold pushing up a little bit higher. We're coming into that 1330 area here, which is going to be resistance. We saw a very nice sell-off yesterday. I had mentioned there was some support, support at 24, which was a 78%, and then additional good support in that 1320, 21 area. I got long on the scalp. Actually, I've just put on a short right now. It's more of a scalp short. I have to see what it does. I mean, I don't want to be holding gold into Yellen's, to the testimony. If she does come out to be dovish, then we'll probably see a very nice rebound in gold overall. So this is, we're coming into the slower exponential moving average, which is also coinciding with the 1330. There is actually some better resistance around 1331 and 1332, but we've had just a steady run all the way up. So my guess is that we may just, go in and pull back, maybe about a couple of dollars here, at least, I would think. So we'll see how that goes and plays out. Walter says, good morning. Good morning, Walter. So the only news that we got, last evening, which was here, Federal Reserve governors are debating what is going on in the U.S. economy, how to set policy. Fed Vice Chair Stanley Fischer told a room of labor activists who met with them not to raise interest rates. He says everything's being argued here is being argued on the board as well. He actually made the comment about overheating. I have to disagree with these labor, activists. They said that last year, and the Fed rightfully did not raise back then. Now, come on. It's a year freaking later. I mean, come on. I mean, like I said, I'm no, interest rate basher, and they have to raise to, already been raised to 3% or something like that. But this is ridiculous. I mean, they showed up at Jackson Hole a year ago, and I think it was warranted when they were saying, hey, they don't be raising so quickly, blah, blah, blah. Because there was thoughts that they may raise in September. I'll be doggone, I just noticed it's here. They're here again asking not to raise. You're crazy. At this point now, it is warranted to have at least, just a second quarter point basis raise. So I think that's, disingenuous at this time to still say don't raise it, still don't raise. So I guess they felt empowered last year because they didn't raise in September and waited till December. And like I said, I think it's warranted. They could probably wait till December, but I mean that'd be kind of pushing it a little bit. But I think, like I said, at this point, it would be within reason. Amanda says, "Morning all. Thank God it's Friday." Yeah, and we'll have to see. I mean, hopefully we can move into September where we'll actually start to see some volume and some volatility. Here in FX, it's been pretty dead, all week long. So. So let's go and take a look here with the sterling. Like I said, it's going to be a very slow day. It's going to be a very slow day, until we get, to Janet Yellen. So there's nothing really happening right now. We'll take a look at what's going on with cable. Sterling hovered near a 3-week high against the dollar on Friday, supported by solid growth in business investment data that helped offset worries over the impact of Brexit shockwave to the European Union. Now, one of the reasons that, Yellen also pointed out was, and rightfully so, in June they were concerned about this, potential Brexit vote. And they certainly didn't want to exacerbate things if things were to play out like that. Well, now you're seeing that nothing's come of it, at least at this point, but nothing's come of it. So it's hard to, lean on that stool to say why you won't raise. You see what I'm saying? So they're losing, and I thought that was very key, is that, hey, we can't raise, we don't know what's going to happen with, Brexit and how that might impact. And I think that was warranted. But now you're seeing this, and that removes that stool. So if you get, once again, a solid NFP, I just don't see where you've got the ability to go on and say, well, we're still going to wait some more. Then now that's when you start to really lose credibility at that point. The pound was on track for its best weekly performance in 6 weeks against a single currency, having hit a 2-week high on Wednesday. Short bets against sterling hit a record high in the week to August 16th, and traders and many speculators have been unwinding positions and booking profits, which help lift the currency. Data released on Friday shows domestic product rose by 0.6% in the second quarter and was up 2.2% compared with the same period last year, in line with preliminary readings and forecasts. Business investment unexpectedly rose between April and June, a period which mostly covered the run-up to the vote on June 23rd compared with the previous 3 months. The pound was trading at 32.15. UK data continues to stifle the scaremongers, said Alex Lytle, senior sales trader at Phoenix Partners, a firm which offers hedging solutions to British companies. While the data set is clearly not post-Brexit itself, solid figures running into the referendum and also strong business investment figures suggest the whole debacle perhaps wasn't as bad as previously thought for the month of June. Sterling rose 1.2% against the dollar last week after the July inflation and retail sales numbers beat forecasts. Recent slew of upbeat data helped the sterling stay clear of the 3-decade low of 27.98, struck on July 8th. The pound had been under pressure early this month on expectations the Bank of England might have to ease monetary policy further in coming months. Central Bank cut rates to record lows on August the 4th and restarted asset buying program to cushion the economy from an expected Brexit slowdown. But after recent data, some investors are reassessing the chance of further easing. Dovish signals from Yellen will see traders start to rule out any chance of near-term U.S. rate hike could weaken the dollar. So we'll have to go in and see. Obviously got cable weakening a little bit here at 31.97, 96 here. So the next key story, like I said, it's a slow day. Nothing has moved to any great extent. So I want to cover the stories as we lead into the Jackson Hole later on this morning. Now, this was back in, that was posted today, but very late in the Asian session. The dollar remained on tenterhooks on Friday, on track for a modest weekly rise ahead of the Federal Reserve's Janet Yellen eagerly awaited speech that some believe could provide clarity on U.S. rates will rise this year. The dollar index, which gauges the greenback, blah, blah, blah. Later on Friday, Yellen will deliver the keynote speech at the Global Central Bank hearing. Many analysts believe she will stick to her less concrete stance that monetary policy is data dependent and a hike is possible. And I think that's what she's going to say. And I have to agree with this part here is she'll just say a hike is possible. It's all data dependent. So obviously if we get a good FNP, that'll suggest that they could raise in September, but we'll just have to see. The anticipation is a bit too much. She's one of the most pragmatic and balanced speakers, said Jennifer Vail, head of fixed income research at U.S. Bank Wealth Management in Portland, Oregon. I think she will leave the door open for a rate hike sometime this year, but I don't see the Fed actually moving until December, she said. Regional Fed presidents have pushed a hawkish message in recent weeks, which Vail said showed they were trying to get the market expectations close to where the Fed is headed, so when they do execute, it's not as a shock to the rates market. Kansas City Fed President Esther George on Thursday said it's time for the Fed to raise rates gradually, given the progress on employment and inflation. The issue of overheating the economy is being discussed with the Fed board. Fed Vice Chairman Stanley Fischer told labor activists, everything that's being argued here is being argued in the board as well, said Fischer. Data overnight reinforced upbeat assessments of the U.S. economy. New orders for U.S. manufacturing capital goods rose for a second straight month in July as demand for machinery and a range of other products picked up, while the number of Americans filing for unemployment benefits unexpectedly dropped. After the release of the U.S. data, futures markets were indicated a 24% chance of a Fed rate hike at the next meeting and roughly 50% by December. See the dollar inch down against the yen. The market may react to one word or one phrase, but I don't think her speech will bring a new dollar-yen trend, said Masashi Murata, senior currency strategist at Brown Brothers Harriman in Tokyo. If the Yellen shows less confidence about the U.S. economy, maybe people would like to buy the yen more, but I also think there are long-term investors who step in to buy dollars whenever it falls below 100 yen. I think it will stay around current levels for a while, Murata said. Japan's core consumer prices fell for a fifth straight month, marked the biggest annual drop in more than 3 years in July, government data showed on Friday, keeping the central bank under pressure to expand an already massive stimulus program. Yeah, that's why I just don't really see the yen gaining any, dollar yen gaining any meaningful ground below 100. So we can go on and move into the charts. Like I said, it's a slow day. Nothing's really changed overall, so it's better to focus on what the theme is for the day. Be just a moment. So we've seen a decent bounce here in the gold market. Be just a moment. So we've seen this decent little bounce here in the gold market here. We're coming into some key resistance here at 1330. Basically, like I said, this market was so oversold that we're just seeing, some of this, I would call it balancing. I don't think you want to say as much short covering. I think most of the short covering was already done here. But we're here at this area. We'll have to see what Yellen says, because obviously, if she were to be dovish, that would certainly go on and send the gold back up. I don't think it's going to send it back up as far as a buy, but it would send it back up as far as what the recent move is. And you look at it from an overall, a little bit larger perspective, which is against this 74.30. I think, let's take a look at this. I don't think you even get the 23% until, the 23% is not even until 32, I believe. Yeah, the 23% be 33.60. So there's some room to run, and we could move a lot further. That would actually be real short covering. And I'm saying is, I don't think it would ignite a big move in gold. To now we're moving a whole ton of a lot higher, but it could certainly go and ignite some short covering. So against this area, we may see the gold probably back off about a couple of dollars here, possibly, because again they'll want to take some profits, and then we'll see what happens when she starts talking. Obviously, if she were to suggest September's, live, I think she's going to say that in a more indirect way, meaning they're open to raising, which is not going to be bearish at all. It's not going to be bullish for the dollar. If she just says, we're open to raising, it's all data dependent, then I think that at that point, that's probably going to be construed as, at best, neutral. Now, she says, we're open to raising next month. And she says, we're pleased with what we're starting to see in the economy, which I think that's warranted to say. That obviously that's going to work more towards the dollar's benefit, and would reassert some dollar strength here. Doesn't mean the dollar would either take off like crazy, but it would reassert the dollar strength. So we'll have to see how this all plays out. But we're seeing some balancing in here with the gold market. My guess is, could be wrong, that they'll probably come back in a little bit more towards this 27, and before we see what happens. They're trying to squeeze as many people here that might be already short. So let's go on and move into the euro dollar. And, we finally got a little run up here above 113. Actually happened while I was still asleep. I don't know what Scott's talking about. He says, what's your gold chart based on which market? It's the futures. Oh. I think he means which month, which is December. October would be the front month, but October, the volume and liquidity is very low. So most people roll from August right into December because October has very low participation. So here on the euro, we did get above 113. I was looking, hoping yesterday for a move to 13.13, which is a 61%. That would also have been a very good area to get short. I was actually saying any moves to 13.10, I would take a short. And I thought we'd at least make it 13.10. I think we made it up to what? I think it's 13.07, but I was asleep at this time. You see, and we talked about that 06 being a key area, and we can see it on the 15-minute chart. But they made it there, and then they pulled back. We can go and take a look at here on the 15-minute chart. You remember that 06 is pretty key. Here's the 06 here on the euro on the 15-minute chart. Here's at 1313. I was, hoping yesterday that the market was going to tick on up there, and just simply didn't do it. But we made it up to the '06. I actually hit there probably about, I don't know, about 30 minutes or so, maybe 45 minutes before I woke up. So I wasn't able to participate in this. Maybe I would have taken a position. I don't know. It's not like as if I would have made a ton of money, but it'd still be nice to catch a little bit of this. But by the time I woke up, it was already at, I think it was at 1291 by the time I already got up, so it had already come down. And it didn't dip a whole lot lower beyond that. We're actually, from the exponential side, we're actually on a buy mode. We've been on a buy mode since right here. You see, so it's already a nice run up here. So momentum is going that way. But don't forget, it's dead markets. There's not a whole lot of participation ahead of Janet Yellen speaking. So let's get back into the 2-hour charts. We're going to have to see what they do. This 1338 is pretty key on the 2-hour chart right here, this zone here. Actually, I would be going on this part, which would be 1340. You see here, this close and this close right there. That would actually put us at 13. So we'll look at this. I myself would be going with that close there. You see that? And that puts you, well, actually, that is 1338. So I don't know why I've got this marked down. That's actually 1335. So I'd be going with 1338 being key right there. A close above 1338, a 2-hour close above that opens the door for much higher. I know that a lot of people, take a look here. A lot of people are, expect the dollar to go on and take another hit, after Yellen talks, because they think that she's going to be rather dovish. I don't know if she'll be, I don't think she'll necessarily be dovish. I mean, dovish, it's all a matter of perspective, I guess, but I think she's not going to be, I wouldn't necessarily expect her to be hawkish, but I don't think she's going to be, she may not be as balanced as I think that she should be, meaning saying, hey, look, we're open to hiking in September, and it's data dependent. I think she's going to say, we're open to hiking this year. I mean, which a lot of people already expect. What I'm saying is, I think that that's the key. If she would say every meeting's live and it's data dependent, then that means a strong NFP would obviously suggest a rate hike. But if she were to say every meeting's live and it's data dependent, I mean, if she were to reiterate that, then that would give the dollar a little bit of a boost. But if she just basically says, well, we're open to raising this year, then she's basically, obviously next month would be this year, but she's putting a lot more onus towards it being open, which would obviously going to hurt the dollar. So just so that, we're kind of on the same page on how that's playing out. I mean, I think that it would be warranted for her to say, hey, look, every meeting's live. You see, if she says every meeting's live and it's data dependent, then that means, hey, if we get a good NFP, we're gonna roll with it. And they just had an unexpected drop in jobless claims. So it looks like we could get another good NFP. You see what I'm saying? So then the risk would be that they would move, and then that would help the dollar. Doesn't mean it would send the dollar taking off, but it would certainly go and help the dollar in that sense. I mean, obviously she gave a more upbeat assessment, and then saying that obviously we get the dollar going. I don't think it means that the dollar, even under those circumstances, would take off and you see the euro turn around collapse, but we'd be able to see probably about 80 pips shaved off the euro quickly. I think that'd be within reason. But obviously, I think the path of least resistance is obviously going to be higher, for the euro to move higher. So once again, I'm just trying to lay the course as far as your mindset, how you want to go in and view things, and how I think when you try to parse out the words, what I think that she may be looking at on that. Depending on how she says that. Once again, to reiterate, if she says every meeting's live and it's all data dependent, that's going to work towards the dollar, because if it's every meeting's live, it's data dependent. We've been having pretty good data so far, reasonably good, and we just had, and potentially we could have another good NFP. That's going to give the dollar a little extra kick. Doesn't mean the dollar's going to take off, have a little extra kick. If she just says, well, we see the rates, we see ourselves raising this year. Well, then that's kind of like really mealy mouse, which ultimately opens the door for later, which is towards December. And everybody's going to say, you know what, that's a free reign. Basically, while the cat's away, the mice will play. We've got open season until December, and then that's going to hurt the dollar. So that's what you want to look at. She's not going to come out specifically and say this or that, but you're going to have to basically parse through the words, and that's what I'm trying to share, is how you want to go and view that. Also, she's not expected to take question and answers after the speech. If she does, obviously that'd be a big surprise. So we're going to move into the cable. It's about time for break anyway. And we see a nice pullback. We came back up to this 32.23. I'd marked these markers off because you can see here we had, I'm not sure if you could call it a shooting star because the wick's not that long, but you would associate it with it. And we got that into that zone that we were talking about. And then you saw a rally back into the zone, but we closed there and we just couldn't do anything with it. And then you see this engulfing bar right here. And then that engulfing bar opened the door for much lower prices. Now, I was pointing out in one of the chat rooms, we did have this hammer followed by an inverted hammer, and then you can see that they were able to just test the lows, which cable does a lot, but they couldn't take out the lows right in here. So you had a hammer here, an inverted hammer, and basically another hammer, and we just weren't able to press beyond that. And if you look at this bar, that bar engulfs this prior bar. And it's not like as if these are 5-minute bars or 15-minute bars. These are 2-hour bars. You can see here where it engulfed it. So this engulfing, bullish engulfing line, once again, then just like this engulfing, and I'm not looking at the whole bar here, right here. You see right here where it engulfs this entire bar. Takes it lower. I'm only looking at the body. I'm not looking at the whole thing. I focus on the body, the open and the close. So it engulfed this bar, opening the door for much lower prices. This one, bullish engulfing once again, engulfed the prior bar. The actual, I should say the body, not the bar, the body, engulfed the body. That's why I look at the bodies. I don't look at the wicks up in here. So, because you could say, well, it did engulf it right here, but then you would have missed this move here. This definitely engulfed the body. Just as this engulfed the body and augured for prices, we actually moved back in to this 32.23Q area, which is where they ran out of gas. It's time for a break, and we'll come back and we'll just look at other pairs. Like I said, it's a quiet day as we go into Jackson Hole with expected. I mean, obviously, there's a speech coming up from Janet Yellen. Okay, everybody, and welcome back to the crossover. As I mentioned, it's a very, very slow day. As we get ahead, ready for Jackson Hole. I mean, obviously, we're already into Jackson Hole. What I'm saying is it's going to be slow until we get Janet Yellen's speech. We were covering the cable right before, in case some of y'all might have missed that. We were talking about the cable here. Is that, we had talked about this area, and we know about this area here, and it's not quite a shooting star because the wick's not as long. But what I was focusing on mainly was the two engulfing lines here. Because mainly I don't use any technical indicators. The only thing I use is my exponential moving averages, and of course I use the levels and Fibonacci. But I don't use RSI, stochastics, moving average, convergence, divergence, and these other things. So I pretty much just go by the candle formations as they come into my levels or zones, and then I use the exponential moving average to kind of gauge as to where the market can come down to. So you can see here that this bar right in here engulfed this prior bar. So that opened the door for us to go much lower, you see? And then this was like a hammer bottom and an inverted hammer. We took out the low here, but we came right back up. But we could not take out the low here. You see here, for these short-term trade setups. Notice how we weren't able to go in and take out the low here. And then you see here, you get this bullish engulfing bar. Once again, I focus on the bodies. I don't care about the wicks. I focus on the bodies. See here, you could say, well, this didn't take out this top tick here. I don't care about that. All I care is about the bodies. And you can see that auger for a move down here. Same thing here. You can see how, cable, we always know it's kind of tricky. They like to gun some stops just below the market. But we held them up here, and the market looked like it was going to try and work lower. We couldn't take out that low. We get a bullish engulfing bar now versus this bearish engulfing bar. And then you see the market work higher until we come back into this key bias pivot. That's why I have it marked off in red. And the market runs out of gas there. It's tough trading because right now with Jackson Hole, there's not a whole lot of movement. So, but I'm just saying is these are the things that you want to go on and look at or focus at for short-term trade setups. Now, we'll go on and take a look for those that I usually don't look at cross rates, but obviously this one's an important cross rate, which is the euro pound. And someone was speaking about this today and was asking me about this. And, we talked about this 85.63. Remember, I mentioned here was going to be, and I've got it here marked at 64. I mentioned 63. I go, it's going to be a great area to get short. And I think it was a 38% of the whole range, if I remember correctly. And some of y'all went and got short right there, okay? And we actually, here's another perfect example here. Here's this one where it's a bearish engulfing bar, okay? I mean, you can see right here, the body is like what? 2 ticks off or 1 tick off, but basically a bearish engulfing and the market works lower. But here's the deal. You have to be, my favorite saying is, it's all relative. It's all relative. So you're in Jackson Hole, you come in, and even though this doesn't impact the dollar, but I'm saying it's going to be tight ranges. And, we got to our 85.63. I mean, you got above it by what? 2 pips. So, I mean, you couldn't have nailed it any better for our entry. And we continue to work lower. This is on a 30-minute chart. The reason I'm doing this is for clarity, okay? Now, the 38% came in at 85.34, okay? We've had a pretty good phenomenal run up here, but the low was, look at the low. The low was 85.28. You exceeded the 38%, and we're in tight ranges, and it's August trading. So you have to be reasonable. If they give you, I mean, here's the deal. In basically around 30 hours, we went from 85.64, the hot top tick was 85.65. We went all the way back down here for nearly 40 pips within 30 hours. And this market used to be really quiet. I don't know how you don't take that money off the table. I might be wrong, but I don't know how you take that up. Tim says, on your breaks, it makes more sense to play Bloomberg or CNBC or some sort of business news instead of music. Well, that's your choice, Tim. I don't care. To be honest with you, I'm going to tell you it like it is. For one thing, I can't go in and show CNBC or Bloomberg because that'd be copyright infringement, okay? And also, generally most of the time, I've already succumbed to previously, and I just accidentally happened to leave the charts on, but generally, let me go and put this back here. Those that are here all the time, apparently you're not, okay? Know that with the exception today, I always have my Reuters feed on the breaks. If you don't like the music, you know what? Honestly, that's your problem. I'm just telling it to you like it is. Because if you don't like it, I mean, I guess you can seek a refund for this free webinar. But I have it on Reuters as all the listeners know, all the time on the break. I just happen to, by chance, forget to switch over the screens. I can't play Bloomberg and I can't play CNBC because it'd be copyright infringement for me to rebroadcast their data, even though it's audio, to rebroadcast it on a live stream. I swear, free freaking webinar, and people still complain. You don't listen. I mean, you're not here on the webinar every day, or you would know that I always have it on the Reuters feed. I mean, I've tried to go in and comply, as much as I can, because people would tell me, well, it's tough if you play, like, matter of fact, Don was just mentioning, what about Oasis? So I've just gone to playing just instrumental music and jazz. That way and I usually keep it on my Reuters feed so that everybody can, and someone did mention that, hey, do you think that, it just gets boring if you just have the charts? So I put it on the Reuters feed. That way, while I'm taking a break, you can still see any news that comes down the wire. I can't, by law, I cannot broadcast CNBC or Bloomberg. Copyright infringement on a live feed. But once again, like I said, we had this sell-off down here, and we had this sell-off, and we had already come down to close to 40 pips, and we exceeded the 38%. So you really needed to be covered here when you know that late into August, we just simply don't have the participation. Late into August. So we're going to move into dollar Swiss. And yesterday I warned about this area here. I told people about it. I told them about, we discussed this, the 96.86, which was confluencing with the 96.90, which is the 50%. And that's exactly where the market went. I haven't warned in the chat rooms because I wasn't in the dollar Swiss, as I told you before. Actually, I almost took a trade in the dollar Swiss yesterday. I was actually going to buy, as we came up here, I was going to buy the Swiss franc futures. But I didn't, I was actually waiting for it to come to a better level. I'm trying to remember what the level was, but it was actually about another 10 ticks away. Because I thought they might be able to come down here. I don't remember what the price was. It was going to be like around, where I was going to enter was going to be around, I think 17 or 18. On the Swiss franc futures, but I don't trade this. But I've said the reason is also it takes a lot. It's very, very slow. But I thought that we were going to come right to this level. I warned in the Wise Trade webinar, right in the other webinar, 96.86, 96.50 is a 50%, and I'll be doggone if we don't go in and get nearly a 30 pip sell-off right from there. So I mean, if you didn't take your long profits, I don't know why you wouldn't take your long profits. Yeah, Tim was saying he didn't mean to offend. It's not a matter of offending. It's just that I can't broadcast Bloomberg or CNBC because, I mean, I'm going to get myself in trouble if I do that. I'm going to get, matter of fact, I'd probably broadcast like some YouTube videos or something. I can't do that either. I think actually, to be honest with you, Blake used to broadcast music on his breaks. Blake used to have like, he used to have, you probably don't remember, he used to have where he would say, hey, let me know what favorite band you would like to listen to. And Blake would play it. I think he played it off. I don't know if it was Spotify or who he played it off. I think it was Spotify. And I think he actually got some kind of a Lotus or something that he couldn't be doing that. So that's what I'm saying is this way, like, I don't even put the name of the band who I'm playing. I mean, obviously, I play Pat Metheny, but that's what I play most of the time, jazz. I don't like Kenny G. I don't like that elevator jazz. But I don't even put his name up there because that might be copyright infringement. Because this way I can say, hey, look, the music's playing in the background. I'm not playing it live. Actually, it's playing on a separate computer's playing on my MacBook. I can't put that because I'll get myself in trouble. That's what I'm saying. I can't put any. I guess reasonably, it's a good question what Tim says, but to be honest with you, the webinar, we're not worried about. I don't think Bloomberg or CNBC is going to come out with any breaking news at the moment. And on top of that, they may be running commercials at that time. We're seeing the gold sell off. I told you I got short gold at the beginning of the forecast. We're coming down here, so we'll continue to see this market work a little bit lower. I think we'll come back towards the 27. I'm short. I told you I got short right as soon as we were coming onto the webinar, about maybe 3 or 4 minutes before we came onto the webinar. I think we can have some trouble. You can see it's been just a squeeze up in here. I think we'll probably come down into this 27-ish area. If you took the short, because I told you I just got short, like I told you, you can probably get yourself close to $2. As a matter of fact, right now, you already have $2 from the high. I'm actually short from 29.40, so I'm going to be lopping out in just a couple of minutes. So anyway, let's see. Let's go on and here to go back here, because like I said, it's slow. So trying to focus on Fridays, we try to focus on tutorials to help y'all out. And I mean tutorials, not that I know all or whatever, but the reason I started following the Swissy, I hadn't followed the Swissy like I think a little over 2 years, is because it happens to catch pretty good turns in the euro. This kind of coincided right here where the euro was running out of gas, but in the last 24 hours, this whole area hasn't really coincided that much with the euro. And I think this is more of a play on what's been happening with the gold market. For a long time, people used to follow the Swissy. They would follow the gold market at the same time. So anyway, that's it on that thing. Hang on one moment. Getting out of that gold position right now. Hold on. Just remove.
Been forwarded.
Okay. So let me. So we'll grab 200 off that per contract. So anyway, let's go and take a look at dollar CAD. This has kind of gone in no man's land. I missed buying this. We talked about this. I just tell it like it is. I think what's her name? Oh God, Shirley came in and she was looking to buy dollar CAD, and she came in at a good time. She was asking about it. She came in and was asking, and I got greedy. I tried to pick it up at 28.47 and missed this entry here. I thought we might. This is when when crude oil got up to 48.30, which was a 61%. I thought that was on that Iranian news. I thought we might get one more pop in crude, maybe up to 48.50, 60, and that would drag us down to sub 50. And I put my order at 28.47, and I didn't get filled, obviously, and then we took off. We had a very nice run, so it was really frustrating, but we've done a whole bunch of nothing since then. That equated with the run up here to 48.30 on the Iranian demand news. I think about them saying they're amenable to a cut or whatever. Anyway. Oh, I think Blake's already here. Or should be.